To take a look at some of the stocks on the move today. Lisa Mateo.
Well, it's all about bank earnings. All right. So it looks like Wall Street's biggest banks, they continue to benefit from that turbulence sparked from President Trump's policies in the early days of his second term. So I want to start with the biggest U.S. bank, JPMorgan. Stock traders, they took in this record haul in the first quarter. Equities market revenue increased 48% to $3.81 billion. That beat expectations, setting a new record. What's interesting, though, is that CEO Jamie Dimon, well, he kind of struck this cautious tone about the prospects of the economy. He said it's facing considerable turbulence. So
yeah, he, right
he did. He pointed to a couple positives, right? You have tax reform, deregulation. Then negatives, he said, tariffs, trade wars, ongoing inflation, high fiscal deficits, volatility. I mean, but it's interesting because those comments just come off of, days earlier early this week when he said that a recession is likely, and then came the 90-day pause and everything changed after that. But it's large and expected reserve. That's kind of the sign that companies are really gearing up for this economic downturn on top of it.
What else do you have?
Morgan Stanley we go to. Stock traders deliver the first quarter revenue, beat expectations, earnings record $4.13 billion from equities trading. That was up about 45% from a year ago. Wealth business, higher than anticipated net new assets, $93.8 billion. You had investment banking fees rose. Equity underwriting coming in about $319 million. Another quick point, debt underwriting, $677 million. Non-interest expenses, though, higher than expected because they had some severance costs of about $144 million, laid off about 2,000 employees last month.
I think business is so good they're hiding it. Get one
They're
more
trying.
quickly.
Wells Fargo, can't forget, kept its expenses
you're doing all
in check.
banks today?
It did. It's the big day, Tom.
I didn't expect that from you. I'd expect that behavior from Tucker, but continue. Wells Fargo.
Wells Fargo beat expectations, credit loss provisions, right? But we talked about Morgan Stanley's non-interest expenses being higher than expected. For Wells Fargo, similar situation. Top forecast, 3.1% decline to $13.9 billion. You have CEO Charlie Scharf. He's really been trying to cut back on costs. Full year guidance unchanged. Now, as far as tariffs, everybody's waiting. What about tariffs? Analyst CEOs, they've really been struggling to predict this impact on earnings because it changes. I mean, this morning we had a change. So it's constantly changing. He did say something. He said, we support the administration's willingness to look at barriers to fair trade. But he said there are certainly risks that are associated with it as well. So it's just kind of this thought about, Trump's election, it came with these promises of tax cuts, deregulation, optimism, deal boom. But so far, the policy changes really have had the opposite effect. We have inflation fears and companies kind of pausing or even pulling some deals, too.
Lisa, thanks so much. For more conversations, listen to the new Stock Movers podcast. Jump Condition out on YouTube, doing really well. Subscribe for Lisa's 5-minute episodes, the biggest winners and losers of the day. Stock Movers out on Apple, Spotify, out on YouTube.